In tonight's video, I thought I would take another quick look at the currencies. As I said in one of my other videos, I was thinking that maybe the dollar was forming a head and shoulders topping pattern. And today, at the end of the Humphrey Hawkins speech, the dollar has completed a reversal, and today it's completed or tonight anyway, it's completed a swing high. So, we'll need to see, if we get some follow through tomorrow and Friday, but it looks like there's at least a decent possibility that the daily cycle has topped. So I wanted to look at a couple of possibilities. The one possibility is that uh, as this uh, intermediate cycle moves down into its intermediate cycle low, that could turn out to be the not only the yearly cycle low, but also a 3-year cycle low. But after looking at this a little more, I'm going to say that may be pushed out to the fall, and I'll explain why. So to begin with, I think we had an opportunity for the intermediate cycle low to also become the 3-year cycle low, but we got that massive intervention in the stock market on election night that also affected the currency cycles, and it extended the intermediate rally in the dollar, um, really elongating this intermediate cycle. So this has become extremely right translated, and usually right translated cycles don't make lower lows. So I'm going to say that intervention in the stock market may have prevented uh, the coming intermediate cycle low from moving below this ICL right here and giving us our 3-year cycle low. So assuming that this right translated cycle doesn't crash or something, then I would think that the most it might drop would be to maybe the 68% Fibonacci level. So I'll put the fib levels on here so you can see we bounced off the 38% fib, and now I think we're probably starting the next leg down, and I think this probably should only have one more daily cycle down. So when this daily cycle bottoms, which would probably be the end of March, maybe the very beginning of April in here somewhere. Maybe we only come down to the 50% retracement, or more likely, probably like the 61% retracement. But because this is extremely right translated, I now kind of doubt that we're going to come down and break this low. I think we're going to need another intermediate cycle to do that. So I'm going to say my expectation at this point anyway is that maybe between now and let's say the end of March or beginning of April, maybe the dollar makes it somewhere down here around 96, 95, and then we get another intermediate cycle, but one that becomes left translated. So maybe we get a bounce up to test this resistance zone here, and then we get what would um, be our final 3-year cycle low, maybe sometime in I don't know, October or November, and a 3-year cycle low should at least retrace 38% of the entire 3-year cycle. So, if it did that, it would make it down to 94. If it goes down if it makes it back to the 50% retracement, we'd be down somewhere between, let's say 90 and 91, somewhere in that area. So my outlook has changed a little bit. I was thinking maybe we might put in the 3-year cycle low with this coming intermediate cycle low, but unless the dollar just really crashes, I think this right translated cycle is going to require maybe another intermediate cycle before we get our 3-year cycle low, maybe towards the end of the year. So I think that intervention in the stock market has probably added at least one more intermediate cycle before the 3-year cycle bottoms.